Welcome back to the Charts Focus 1 technical analysis videos where we teach you how to work hard and trade smart. So guys, happy Labor Day weekend. It's a very long weekend, and again, this is a good weekend to be chilling out, right? It's where you should not be focusing on work and especially the stock market. So hopefully you guys have regained your energy back because it's that time again to come back into the markets tomorrow. And again, it's a very short week. So if you guys are still in that Labor Day weekend mindset and you guys aren't fully focused into the markets, I highly recommend you guys to not come into the markets. Okay, I mean, I've seen people taking an entire week break even after the Labor Day weekend so that they can be completely re-energized for a full trading week, which is going to be next week. So, if you guys need that time, make sure you guys take that time. All right, so with that in mind, let's take a look at SPY. So, bottom line for SPY, we are officially back in an uptrend. That's right. So technical wise, okay, we are definitely back in an uptrend because number one, if you take a look right here, last week we retested, reclaimed, and then closed over my weekly 10 SMA, which is my red line right over here. So what that clearly states is that the market has switched the momentum from bearish to bullish. All right, so that is clearly a trend change that we saw last week. So here's what I said last week as well. The weekly 21 SMA, which is my light blue line over here, is catching up now as it coincides with that 429.50 level where my mouse cursor is showing. Since the price had breached the support of the weekly 10 SMA, which is again the red line. And so let's see if we can continue to pop upwards to further allow the 21 SMA to catch up. And guess what? That's exactly what happened. And in fact, we held this ascending support trend line that I drew last week. Excuse me, not last week, 3 weeks ago now, right? Perfectly. And so I even drew I put an arrow here to indicate that there's a potential for this to pivot off of this ascending support trend line, especially if you were to respect the area, the support area that is formed around the weekly 21 SMA. But again, we're being cautious because if we did break below this ascending support trend line, then for sure we're going to retest 429.50 and possibly retest the 21 SMA as well, since this SMA was coinciding with the 429.50 level. But at the end of the day, we didn't get that, and instead we came into close, vicinity of the 21 SMA here, and we pivoted away at this ascending support trend line, and we didn't end up hitting this 429.50 support level. Now, with all of this in mind, okay, you guys have to remember that we're still seeing a lower high. Now, why is that the case? Well, first of all, 459.44 is the all-time high for this year. Okay, for this year only, 2023. Right? And in order for us to be back officially in an uptrend, we need to go over this 459.44 number. Right? And before we even do that though, there is a level at 458.50 that we need to breach in order to try to go past the 459.44 level. And so with that in mind, last week's highs is considered a lower high until sometime this week, possibly, we can break over last week's highs. But based on the data that we have now, we're still seeing lower highs, All right, so with this lower high, it could indicate that we could be seeing lower lows in the future. And that should align with the seasonality trend of September being one of the worst performing months, and also given the worst returns, for quarter three, right? Now, the only reason why I am even showing you guys that there is a lower high here from last week's highs is that I said this. It would seem that the weekly is also showing a potential macro cup and handle forming, and we need to zoom all the way out. So why don't we go ahead and do that? So with this naked chart here, we can clearly see the rounding bottom or the rounding base, whatever you guys want to call it. Okay, so this is the cup. And currently, we could be forming a handle. Now, in a cup and handle situation, we can be forming two different types of handles. The first handle that we can form, which is a textbook handle, is a flat handle. And what that is that we have a flat or horizontal resistance and then a flat horizontal support as well. Okay, so right now there isn't enough data or evidence to indicate that we're about to see a flat handle being formed. Right? Now, number two, another type of handle could be a descending channel or a falling wedge. But again, that's kind of similar at some point, right? And the only difference is the falling wedge has converging trend lines. But again, it's all the same to me if you're looking at it from a macro perspective. So, if you guys want to, potentially be looking out for a falling wedge or descending channel, it's all going to be the same. Okay, we're all going to be looking for a breakout to the upside either way. Now, the reason why I am focusing on that second scenario or second situation is that, again, we could be seeing a lower high. And so if we have a lower high here, there is a possibility that we could be seeing either a descending channel or a falling wedge to be forming as our handle. Okay? So you guys have to take note of that. Because if you do decide to form either a falling wedge or descending channel, that means there's still a very good possibility that we could be seeing lower lows, but at the same time, just solely because of the fact that we have a lower high, could give us a lower low as well. All right. So again, I am on the surface bullish. Why? Because the technicals tell me that we need to be bullish. All right, we're back on the uptrend. Okay, so on SPY, focus on the weekly time frame here, because again, we still have not filled in that gap since early June. All right, I even said it right here. So if you go back on the daily time frame, right, this gap up that we never filled in will eventually have to be filled in. All right, so you guys can't forget that. All right, make sure you guys remember that, because SPY will always 100% fill in every single gap that it has left behind. All right, so that's something to remember. Now, on the daily time frame, we've also hit a major level of resistance at 451.50, or a supply area between 452.50 to 451.50. And so, the first day of September, okay, which was last Friday, we ended up being red. It makes sense. We were looking for a pullback. And so I wouldn't be surprised if we pivot away from this descending level of resistance that we could be forming here. Okay, because again, where does this descending trend line come from? From the macro cup and handle. So we can pivot away, down, back down, and also stay below this resistance level at 451.50. So it would work out technically here, and everything will have a complementing indication that we need to be coming back down. So if we do see another pullback this week, since it's also a very, very short week, I'm also going to see, or I could potentially be seeing, low volume in the markets. Right? And when we do see low volume in the market, we tend to see pullbacks as well. All right? So make sure you guys keep that in mind. All right, let's take a look at the NASDAQ, the QQQs. So NASDAQ is actually even leading the charge here, since again it led the charge downward into the first pullback of our, well, this entire year we've been going straight up. If you guys have been living under a rock, right, we've been going straight up since 2023 started. And this pullback so far, this recent intermittent pullback has been one of our major pullbacks ever since this new bull market started. So on the weekly time frame, again, it's the same thing as SPY. All right, you guys can translate my technical analysis right onto the QQQs, but obviously the levels are different. With the Qs, okay, tech can completely switch this around and lead the market back up higher, as it did when it led the market back down for an intermittent pullback. And so for QQQ, it's the same thing. We almost retested the weekly 21 SMA, but we just got very close to the vicinity of the 21 SMA, and we bounced away and we pivoted right at the 357.50 support level. And also we did not hit this support level at 348. Like I said right here, just like in months of May and June, if we pull back more, we need to hold 348. But the weekly 21 SMA has breached over that level now, so there is a possibility that we don't even retest it again. And that's exactly what happened here, right? We just got into the vicinity of the 21 SMA. The circular area is what I would be, envisioning in my head when I'm thinking about the vicinity of the 21 SMA, okay? So with the Qs here, definitely same type of technical analysis here with SPY, but for the daily time frame, when we're going down to the specifics of the levels, QQQ definitely seems like it has progressed a lot further by breaking over 373, which was a major level of resistance on the daily time frame, and we have progressed way further as we have gotten pretty close to the most recent highs here, which was around here. So this exact number is at 384.88. So on the daily time frame, okay, we have the first high here at 387.98, and then we have our second lower high point or pivot point at 384.88, and then last week's highs right here was the third pivot lower high point here, okay? So again, the specific number is 380.83, okay? So we have 1, 2, 3 pivot high points, okay? And again, these are still considered, all right, these two are still considered lower high points compared to the first pivot high point here at 387.98. So unless we can get back over 384.88, okay, we can, if we don't go over 384.88, there's a chance that we can go lower again and create lower lows, because again, the seasonality trend for September is historically bad. All right, so make sure you guys remember that. Okay, so with all of that in mind, and for the fact that, yes, we are in an uptrend, okay, and tech could be leading that uptrend higher back to the upside and potentially seeing new highs again for 2023, we're going to be focusing on tech names. Okay, so for this short week, right, we're going to be focusing on 3 tech names. And the first one here is Match. So MTCH, Match Group Incorporated. This is the dating conglomerate. Okay, this is the monopoly of dating, right? Dating websites and apps. Okay, so Match looks very, very explosive. It was able to break out of this descending level of resistance, this descending trend line, and it was backed by volume as well last week. And we were also able to break over this horizontal level at $46, right? This whole number resistance level at 46. Now, on Friday, when the markets pulled back, this one also pulled back as well, but with very, very low volume. And that's exactly what we want to see when we want to be seeing a continuation of a breakout to the upside. Now, we need to be open with any type of possibilities in the future. So if we do break below 46, okay, if you can't hold 46 as a new level of support, if you come back down to retest it this week, that means there's a possibility that this breakout from last week was a fake out or a fake breakout, right? Now, that's the reason why I gave you guys a bounce entry at 46.10. So as long as we hold over 46, then we can get a great retest and early entry at $46, and we could ride the uptrend higher and higher and higher until we come back to all the previous pivot high points at 49.24 and 48.93. So my short-term price targets for a match will be $49, which is kind of the medium or average right in between 49.24 and 48.93. Okay, so if you just round up from 48.93 or round down at 49.24, you get 49, which is also a whole number level. Okay, so 49 is our first profit target. Okay, and for swing especially, since this name looks really, really explosive after having such a tight consolidation here and staying over the daily 50 SMA, we could be getting a nice 1-to-3 risk to reward ratio on this trade. Okay. All right. So the next name that I want to look at is Roku. So Roku, right? You guys know the infamous saying about Roku, okay? Roku, broku. So the reason why it's called that is that there's a lot of people who hate Roku based on the fact that it has a horrible price action, okay? Whether it be equity or even the option contracts. So, for Roku, definitely you have to watch out for this one because it can give you a lot of shakeouts and fake outs at the same time. But the reason why we're looking at Roku this week is that, well, we've been making really good higher lows and higher highs. And that's exactly what we want to see as a textbook uptrend. And as we're making these higher highs and lower highs, higher lows, we've been seeing these large impulsive breakouts to the upside, right? And it seems like we're in the cusp of another large leg up higher as well. Now, one thing that I'm going to say here is that I'm not going to expect to see another big breakout or a big impulsive move to the upside like we saw over here. Because again, these candlesticks were fueled by the momentum off of earnings. All right, so we had a catalyst here, and that's the reason why we got a very large move to the upside. But then again, what happened after this? We immediately erased all the gains that we created from this very big move to the upside. And obviously, that could provide us with a little bit of a hint that we won't be seeing a large breakout like this over this major level of resistance at 82.50, which brings us right back to what I said here. Okay, Roku long over 82.50. This is our breakout entry point. All right, so our ideal entry point will be a breakout over 82.50 and then a pullback to have a retest at 82.50, which will turn the previous level of resistance into new level of support, and that will create a bounce entry at 82.50. So that will be our most ideal entry for this name. But again, if you guys want to play the breakout, then you have to get the entry right away over 82.50, right? So again, we're looking for the same pattern that we've been seeing so far, right? Right? This pattern here. Okay, so higher highs, higher lows. All right, it's a textbook uptrend. Now, if we want to take a look at the weekly time frame, all right, we are also in a textbook uptrend in the larger picture here, the bigger picture. And so far, it seems like we're also forming some type of a rounding base as well. So we have complementing bullish technical indicators here on the weekly time frame and the daily time frame. So all the bigger time frames. So this is a good sign that this name will provide some sort of a good swing trade. Now again, because the fact that Roku, its nickname is Broku, Roku Broku, since it does provide a lot of fake outs and shakeouts, it might just be a better idea for us to be looking for a day trade on this one rather than a swing trade, since again, we're looking at a very short trading week. All right, so last but not least, team. So team here was able to really just navigate the market pullback really well. As you guys can clearly see here, we've held over the daily 10 and 21 SMAs. Again, the red line is a 10 and the light blue line is a 21. And last week, we had 4 out of the 5 trading days to be extremely bullish and green. And this is even before the market decided to catch a bid back to the upside. So if you guys remember here, okay, on SPY, all right? So SPY here, okay, or actually, yeah, so SPY is a lot weaker compared to team. Even on Friday, last Friday, right? It was able to continuously move up higher and higher and higher like SPY did, but it held a lot more relative strength compared to SPY as it saw on Thursday and Friday. Okay, and based on the SMAs as well, okay, we were able to stay over the daily 50 SMA while creating higher lows and higher highs, right? And so with team here, if we take a look on the weekly time frame now, right? What I'm trying to play at here is a larger move to the upside to see a potential retest of the weekly 200 SMA. Okay, and so basically, we want to be able to catch the move to the upside, where we're being magnetized to this weekly 200 SMA. All right. And right now, this 200 SMA continues to climb, but at some point, I expect it to flatline so that the price can reach and retest this 200 SMA and eventually reclaim and close over this weekly 200 SMA. And by that time, I wholeheartedly believe that we'll be retesting this weekly 219.50 resistance level. Right? This is a major level of support in the past and a major level of resistance in the past as well. So for now, this 219.50 level is a major level of resistance since we are staying below it. And also, it should be coinciding with this slowly rising weekly 200 SMA. And that should also be a good time for us to catch any type of move to the upside either this week or even into next week as well. Okay. Now, if you go back on the daily time frame, with that in mind, that longer perspective in mind on the weekly time frame, this one has been pushing up higher and higher and higher the past 4 trading days last week. But there's a chance that we can pull back this week, since again, it's a very, very, very short week. And since it is a short week, last week we saw a very large drop off in volume as we continue to make higher highs and higher lows. So again, the relative strength is a lot better compared to SPY and even QQQ, okay? Since, it's been very, very bullish so far from last week. But this drop off in volume as we made higher highs and higher lows each trading day tells me that we are due for a pullback. So if you do pull back this week, okay, whether it be tomorrow, okay, so if we do pull back, I expect us to come back down to retest this whole number at $200. This is the psychological level at $200. All right. And so again, psychological levels such as 100 or 200, they tend to be a magnet level for price, especially if you're due for a pullback or a breakout. Okay, so in this case, we're due for a pullback or an imminent pullback here. And so if we do see a pullback, I expect us to come back down to retest 200, bounce on top of it, giving us an opportunity to have an entry point over $200, right? Specifically at 200.10. Now, if you guys don't want to bet on any type of pullback, and if you guys just want to simply follow the price trend, you can always look for an entry over the previous week's highs or just the previous high of the day, which ended up being on Friday because it made the highs of that week, of last week, and the high of the day on Friday. Okay, so that number is 207.42 specifically. So if you round that up, we get that whole number level at 207.50. All right, so that will be your official entry point to see a continuation of this nice textbook uptrend of higher highs and higher lows. Okay, now again, if you guys remember, if you do pull back to 200, that's still considered a higher low. Why? Because if you do bounce over 200, then again, that's going to be a higher low compared to this low right over here. All right, so team, definitely look out for a good entry point over 200 for a nice bounce entry, and also it's a early entry, or just simply look for a breakout entry over the previous week's highs, which is also the previous high of the day, which was last Friday. And if you guys want a good price target, okay, I'm a bit bullish on this one, so I would say 212, or at least the most recent weekly previous high pivot point, which was at 211.65. I would say around 211.50 to around 212 will be a good target. But a longer term target is going to be, if you guys can guess or assume, the retest of the weekly 200 SMA, which should be around 219.50 as we head up higher. And that's if and only if we head up higher. All right. Okay, so that is it for this week. Again, it's a very short week. So if you guys don't want to be trading this week, that's fine. Right? You guys don't need to force yourself to trade, especially if you guys don't see any type of charts that are favorable for you in your eyes. But again, these charts that I'm giving you right now, these trade ideas, look very good for this week. So make sure you guys keep your alerts on at these levels that I've given you so far. Right? Okay, so I'll see you guys tomorrow morning, and happy trading and good luck.